Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Crillo. Today we have Jack Martin. He is a co-founder and chief investment officer of 5210. So it's an Arizona-based investment firm specializing in the acquisition and reposition of mobile home parks. The firm is vertically integrated and manages 1,800 lots across 5 states and currently with $60 million of private investor capital. Jack's experience includes general contracting, development, capital management, and the acquisition and disposition of over $450 million worth of residential and commercial real estate. After serving in the U.S. Army, Jack became a general contractor specializing in land and custom home development, and then spent 14 years with an Arizona-based real estate firm where he acquired and sold over 2,000 single-family homes, over 900 apartment units, and mobile home park lots. So Jack, thank you so much for coming on the show today.
Well, thank you for the invitation. Excited to share with your audience a little more about this unique niche of mobile home parks.
Yeah, that's definitely what we want to get into. Before I went over a little bit about yourself, both personally and professionally, but if you can expand a little bit on kind of what got you to 5210 and doing everything you're doing there.
Yeah, so I've been in real estate most of my life. Going all the way back to my initial attraction was in the military and listening to late night TV and Carlton Sheets. I don't know if you know who Carlton Sheets is. That means you're probably around 50 years old.
No, my dad bought those programs back in like the 90s or so. He's literally originally when he was only about 45 minutes north of me here in Florida in Stewart.
Okay.
But
there you go.
Yeah, I know those shoes.
The idea or the seed was planted while I was an 18-year-old in the U.S. Army. But yeah, so then I did all manner of real estate until I tripped over mobile home parks. And, I had originally thought the same thing that most people think, which is, the stereotype of mobile home parks is that they're trailer trash and it's kind of the, ugly stepchild of real estate. And, it doesn't appear to be attractive. But when you own one and you find out how stable they are and what steady kind of permanent cash flow they can produce, and then now with the recent tax changes, what tax benefits that you can get, like there's just nothing that compares. So, having been in all other or many other asset classes and then tripped over this, I decided to build a company that is specifically focused on the acquisition and reposition of mobile home parks.
Other than Carlton Sheets, was there anything else that really preempted you to get into real estate investing? Did somebody a mentor you had, maybe in a different line of work?
I think it was just a pathway that I was put on. So I was a general contractor, and you make more money if you buy the land and build the home than you do if you're just the builder that builds the home. So it just seemed like it was kind of a natural path. As a person who has the talents and skills to renovate single family homes, you make more money if you buy the home and renovate it than you do if you're just a contractor who does the renovations. So it just seemed like a natural path to me. One thing led to another, and pretty soon I was doing a couple hundred homes a year and, 500 apartment units a year. And, that's scale has always been an interest to me.
Yeah. Makes perfect sense. So what was kind of got you into mobile home park investing? And one thing I found interesting about mobile home parks is that many decades back, somebody wanted to sell my dad a junkyard, auto salvage yard, and my dad didn't want to buy it. And the guy's pitch was really, they're not making any more of them. And it's the same thing I see with mobile home parks. But how did you stumble into it from maybe some of the other asset classes you were working in residential?
Yeah, so I didn't purposefully pursue mobile home parks. What had happened was I was looking to purchase a vacant apartment building, and the city said that you couldn't bring that back online as an apartment building because it had lost its conditional use permit. And in order to use it as an apartment again, you needed more parking. Right next door, there was a small mobile home park that its land would satisfy the parking requirement. So I purchased the mobile home park, went back to the city. Long story short, we never wanted that mobile home or that apartment to come back online. Today, that's a government office, by the way. So I own this mobile home park. So I thought, well, this is no different than apartments. It's just many people living on one piece of land. And then I discovered how wrong I was. They're distant cousins. Yes, the similarity is there's many people living on the same land, but the difference between a mobile home park and an apartment building for your audience, mobile home park is really a giant parking lot. As the owner of the park, I own the parking lot. I own all the parking spaces. I own the roads and any kind of common amenities if there's a clubhouse or an office or something like that. But I do not own the homes. Those are owned by the tenants. I'm renting parking spaces. I'm not renting real estate. So I don't take care of the maintenance on the homes. I just set the rules with respect to what it needs to look like. And the tenants have to abide by those rules, but they pay me a monthly lot rent for every month that their home sits on my parking space. So the neat thing about mobile homes parks is that the mobile homes rarely ever move. So if you think about the tenant mindset in an apartment complex or a single family rental or a condo or any kind of residential real estate, their mindset is this is temporary. I'm going to live here until something better comes along. Whereas in the mobile home park, the mindset is I'm a homeowner. I own this home. I don't intend to move. So the outcome is it's very, very stable cash flow. You don't have turnover like you do. Well, you don't, there's not, this pace of turnover is extremely low in comparison to other asset classes. So we'll still have tenants who sell their homes because they're moving to the other side of the country. But we don't have to reposition the unit. We don't have to put it for sale. We're not the one who has to handle that transaction. We just approve the new owner of the home to be a resident in our park who pays the lot rent. So the last month, the prior owner of the home paid the lot rent. This month, the new owner pays the lot rent. So when you discover the difference, then you start to appreciate why it's kind of the secret asset class that most people would otherwise not pursue. But to your point, they're not making any more of them. Now, again, they are making a few of them, but they're going away faster than they're being built. So there's about 10 new mobile home parks of size built in the United States every year. If you compare that to apartments, there's probably 10 new apartment buildings coming online 10 miles from where you're sitting in the next 12 months, right? And they're being knocked over for redevelopment at an alarming pace. So there's a scarcity component to the mobile home park business, and it's very attractive.
So can you kind of break down a little bit more on your investment strategy and your criteria? So some of the markets that you guys are focusing on, what types of actual parks you are targeting?
Yeah, so we're pretty picky. We're not the group that buys a deal just to deploy capital. You know, I like to be in a position where if I'm buying this real estate, I love it and I want to own it indefinitely. So it's kind of like looking at a marriage. You know, I'm going to be married to this property for at least 10 years. So I better not just like it, but I better love it. As it relates to the markets, we're not necessarily focused on a specific market, but there's about 22 states that we like. Those states have markets where median home values are 300,000 or greater. They have favorable landlord-tenant regulations. So likely the coastal states, everything up in the Northeast, states like Colorado, Illinois, Minnesota, where they're pretty blue states and there's rent control or there's whispers of rent control. We don't want to be in a position where we can't execute our strategy because of some regulatory changes. So we like to stay in states where we're pretty confident that the runway for the next 10 years is going to be favorable to the landlord-tenant relationship. And then the quality and size of the asset would be the third thing that we look at. So we're really not interested in acquiring a park unless it's, over $10 million. And that usually equates to 100 lots or more. And then we'd like to be of quality where you can get agency debt. So that's usually going to be, in the apartment world, you'd call that like a, B- asset. We want to be in that type of quality or above.
No, that makes perfect sense. So that was one of my other questions too, is how you finance it. But with agency debt, obviously they have to be a little bit higher quality properties, like I guess your A and B class mobile home assets, to be able to get that that type of financing from the government.
Yeah. So if you look at kind of the 10,000 foot view of mobile home parks, you have trailer trash. Those are real. The ones that you see on an episode of Cops, or in the TV world, those are not parks we look at. Then you have brand new manufactured housing communities. Those are 5-star gated communities where everything is brand new. They're fully amenitized with sport courts and pools and spas and dog parks and playgrounds and clubhouses and all that fun stuff. And then in the middle, you have 3-star parks, which is, nice paved streets and curbs and gutters and maybe sidewalks. Maybe there's an office, but not a lot of amenities, but it's still really clean, call it manufactured housing communities. So mobile home parks is a little bit of a stigma. They're all considered mobile home parks, but there's a spectrum of quality and density and the age that it was built, and all of those things contribute to the quality. But as it relates to agency debt, typically there's a floor with respect to the minimum quality requirements in order to qualify for agency debt. And that's going to be wide paved streets. It's going to be, 10 homes per acre or less. It's going to be paved parking areas. There's going to be some pretty simple requirements that would cause that to be a nice mobile home community.
When you're acquiring these assets, are they coming from mom and pop owners, or since they're larger $10 million plus assets, are they really coming from other investment groups?
It depends. I mean, historically, they're more mom and pop, or let's say, a intelligent real estate investor who owns a single park and then he owns a bunch of other commercial real estate. There's a place for acquiring from other investment groups. If, they bought it and it was a heavy lift and they did 70% of the work and now it's time for them to exit and there's still some meat on the bone. There's a place for that, but typically it's going to be one of those two.
Yeah. And I imagine this is coming from a mix of both off market and then also through brokers as well that are listing this nationwide.
Correct. Yeah. So they're all off market. We've made the attempt to be competitive on the on market listings, and we've never been successful on that front. Doesn't mean we never will, but we never have been. So, our focus is off market deals where it's direct to the owner, or maybe it's a pocket listing of a broker.
Yeah.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carrillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com.
So one thing you mentioned about not owning the homes, and when I've spoken to mobile home and park investors, that's kind of like the kind of the gray area where you're buying parks. And if you start buying them with homes and you're owning the homes, you become almost like a D-class, C- landlord, right? How are you? I imagine some of the parks you are buying, they have some park-owned homes. How do you handle that during the acquisition and during your value add renovation stages?
Yeah, so we're not really concerned about a small percentage of park-owned inventory when we buy a mobile home park. As long as it's not 70% or 60% of the inventory. Typically, when you see really high park-owned inventory, that means it's difficult to sell homes in that market. So when you have that kind of dynamic, you can't ever get to a spot where you're fully stabilized and qualify for agency debt. So that's another condition for agency debt is they don't want to see park-owned inventory because they know that the tenants could move out in a weekend. It's just a pickup truck and two buddies and they're out of there, right? So the stability of mobile home parks comes from tenant ownership of the homes. So I'd like to see 80% tenant ownership, and in those kind of deals, what you'll see is that the owner either was okay with some rental income because he thought it was greater than the stability he could gain from tenant-owned units. So that conversion is usually pretty easy. You go in there and either sell the homes to those existing renters, or when the leases run out, you recondition the home and then put them on the market and sell them. So a lot of those factors, I mean, if you don't have a median home value of $300,000 in the market or greater, usually you will see high park-owned inventory, because the only way to fill up spaces is to rent the homes. So it's not a primary strategy, but if we love the real estate, we can reposition park-owned inventory to tenant-owned pretty easily.
Interesting. So with, you have 1,800 lots right now, and when there's a asset class that becomes very popular, and we've seen it through all real estate classes, industrial coming through, now mobile home parks is another one of them, that are really gaining the attention of large players, Blackstone, Carlyle, and that have very long time horizons when they're buying these properties. How does a mobile home park investor on a smaller scale really compete with that when the person you're competing with is maybe just betting just on the land alone and not on the park?
Yeah, so it's certainly, especially when you look at the scarcity component, each time a new fish comes into the pond, the pond's not growing in size. So each time a new fish comes into the pond, it gets more crowded. I believe that there is a percentage of the privately owned inventory. So in other words, it's not owned by the institutional owners or the professional owners yet, where the current owner does not want an institutional owner to be the next owner. And that's typically for a couple of reasons. One is they don't like institutional owners. Two is they have a relationship with the existing tenant base, and they're afraid that if an institutional owner takes over, their tenants become, the institutional owners could be a vulture to their tenants. So they're looking for somebody who's more hands-on, more boutique owner who will treat their tenants and their park, in the same vein that they did, and not just as a number. So, most of the acquisitions that we make would have been a candidate for the institutional owners as well. But because the owner was seeking a different kind of buyer, we were a way better fit for them. But it is a lot of hard work. I will admit that we have to turn over a lot of rocks to find a deal that's a good fit for us. So we'll look at 150 deals a year, and we're happy if we buy 3 or 4.
Yeah, a lot of due diligence on those properties. When you're looking at those properties, how soon is it that you're going out and actually walking those properties during that due diligence process? Or is it a quick inspection on your end, underwriting pro forma, and then you're going out during or before an LOI? Or is it something where you're putting out a whole bunch of different LOIs to seeing kind of what sticks and then going back out?
It's a combination of both. And a lot of it depends on the owner. So, if we're talking to an owner where he says, hey, so far I like what I hear about you guys. I'd like you to see the real estate, touch the real estate before you make an offer, then we'll go that route. But if it's an owner who says, I'm not going to share anything with you until I see an offer, well, then we have to go that route. So a little bit of that is directed by the audience. And, most of these owners they have their own kind of set ways. So yeah, you have to be able to dance regardless of what the flavor of the dance is. And we're pretty adept at both.
Yeah. And for people that talk about greedy investors, I found this on my first property I bought, just like you were saying. The person I was buying it from was like, somebody had been in the property for like 20 or 25 years. And he was like, I was told by the person I bought the property from to take care of this guy in like 3. And he's like, all right, I'm going to move him to another property because I know you guys are like doing this renovation, so I'll take care of it. And it was amazing because it was literally, we're going 2 ownerships down. We were taking care of this tenant, and I just thought that was something that really stuck with me throughout my real estate career. And when people are like, oh, they come in, you see on TV or whatever, or news, they're just jacking up rents. There's no personality. I mean, I can see how someone would avoid selling to an institutional buyer, even if it was a few percent more, versus selling to someone where they're going to be a little bit more human to human contact with that.
Yeah, it's interesting because I think immediately of one of our tenants in one of our Arizona parks. They've been there for 45 years now. So we're the third owner since they first leased their spot, living in the same house, and their whole life has changed. They've grown up and raised a family, and their kids have moved out, and now they're seniors. And so it's really neat to have that kind of dynamic exist there. But there's a lot of that kind of and it's probably because mobile home parks are the affordable housing solution. And the current owner knows what's happening out there. I mean, you can't own a large institutional quality asset and not get calls from brokers. We're promising you, pie in the sky. It's impossible to hide. So they know what the market looks like out there, but their concern is that there's a human element in this business. And if that doesn't matter to you, then you're not an appropriate buyer for their park. So it has to matter to you. So I think the correct way, most of the properties that we acquire are going to have rental rates that are lower than the market. The previous owner wasn't raising rents at the same rate as everyone else. The appropriate way to approach that is to first go in there and make the improvements that the previous owner did not want to spend the money to complete. So redo the roads so they have brand new roads, and redo the clubhouse or the pool or whatever other common amenities so they're essentially brand new. Improve the lighting, upgrade the landscaping, put in security if the property, if it's appropriate, gate the entrance, add lighting. It's like all these kind of simple things. Yes, they cost money. But prove to your resident base that, hey, we're not just a new owner who are going to come in here and raise the rent. We're a new owner that's going to come in here and make your quality of life better. Yes, we're also going to raise the rent. You're $200 behind market, but we're not going to go $200 in year one. We're going to take little bites out of that, and we'll catch up to the market, in years 3 or 4. Give you at least some runway to budget for it. So I think that's the right way to approach it. But when it comes down to paying the highest price for an asset, the only option that you have is to raise the rent all the way to market year one. So it's unfortunate, but that's just the way the business is. We like to avoid that. That's not our MO. We want to have a really good relationship with our residents because we plan to own these parks for a long time.
Yeah. Yeah, with every asset class within real estate, there's pros and cons to kind of who you're renting with. If it's triple net lease, you might, you're getting that longer term, you have to deal with the maintenance. If you're doing apartments, yes, there's less consistency. People might renew once, but the thing is they move out, and that's where you can get that unit usually closer or at market rent. With yours, you have more stability, less volatility. However, yes, it's more difficult to achieve market rents in the short term, which is fine. I mean, if you're still eating away at it, if that's the right mindset to have, while improving the tenant's experience, I think it's a win-win.
Yeah, I agree. Yeah, it's kind of the tortoise and the hare. With some asset classes, you could jump from, start to finish really quickly. And with mobile home parks, it's a little bit more of a patient game. And if it's played well, it's extremely stable and it's worth it. But I know we used to do apartments, and we would empty half the apartment unit where the rents were $600. And this is way back. When I say 600, you know how long ago this was. And then we would renovate those units and re-tenant it at $1,200, and then empty the other half and renovate those units and re-tenant it at $1,200. And that was an 18-month process or a 12-month process. So mobile home parks don't work that way because the tenants own the homes. So when you purchase the real estate, you also assume all the tenants. So it's, the tenant base is really important to understand what kind of tenant base you have when you're purchasing a mobile home park.
So going back down to during your due diligence and inspection, obviously, if you're buying parks, there's going to be a lot of, for the most part, I would imagine there's deferred maintenance if you're buying a park from someone that's owned it for 20 or 30 years. kind of what are some of the red flags you see and do during your due diligence of like the infrastructure of the park? You know what I mean? That you usually, when you're walking, what you usually find that requires a second look, or something else to kind of to figure out how you're going to change your renovation budgets?
Yeah, some of it you can see and some of it you can't see, at least initially. So when it comes to infrastructure, everything that's above ground you can see. So if the pedestals are old and falling apart, you could essentially guess that you're going to have to replace those. Particularly if your plan is to put in new homes. A lot of times the older homes had a lesser amperage requirement, and the newer homes are going to have a greater amperage requirement. So you have to understand what the current wiring looks like and what the current pedestal's capacity is, so you know if you have to budget for a greater amperage. We typically don't buy parks of that nature, but that's something that we've learned in the past. You do underground sewer inspections, like you get the sewers cameraed. Some red flags are Orangeburg. So there's a type of material that was used that was kind of like a cardboard / clay. And, it worked, but it deteriorates over time. And those, especially if you have trees or plants that get down in there, the roots get down in there, you can't solve for that. So that has to get replaced. To us, a park that has Orangeburg is just a no. I mean, it would have to be a really good deal that would allow for a substantial reposition of the underground drainage lines or the sewage lines. So, if the price of the property wasn't sufficient to accommodate for that, we would just pass on it. Typically in a mobile home park, the water that comes into the park is a single meter. And then it's not sub meters. It's split. It comes in on main lines, and then it splits off on smaller supply lines that go to each one of the units. And a lot of times those are not sub metered. So we'll budget for sub metering those. If the risers are built out of the old material, so a lot of times they're built out of galvanized material or steel pipe that would corrode with time, you have to budget to change out those risers. So, and same thing would be with the underground water. If it's coming in and all of it underground is not PVC, well, then likely you're going to have to budget for that as well. So, a mobile home park has a tremendous amount of underground infrastructure. And you have to make sure that you understand what you have, or that could just become an expense drain that goes on for years. So, we have purchased parks where there's been an ongoing annual budget for replacing a section of the infrastructure in a very organized manner. And they're 80% done with it. And we just keep that line item in the budget. And we'll purchase that park and continue with the same vendors and contractors that do it every year. So there's a way to go through it in a structured manner where you end up with brand new infrastructure. But certainly probably one of the most important things to look at.
Yeah, it's also with that infrastructure you're talking about, you're not really getting rent increases, I would imagine, on anything underground. You're really getting it on what you mentioned before, which is really common areas, the roads, landscaping, stuff like this, which lighting is a big one. It makes a huge difference. I think that's where you're able to kind of sell the rent increases or lot increases a little better to your tenants than we something that you don't even see, we fixed, or we put this new water line in and now we can sub-meter you. You know what I mean? So,
yeah. Yeah, unfortunately, that is the truth. It's kind of like buying a house, and the framer was amazing, and he used extra studs, 12 inches on center instead of 16, to make the house stronger. You're the buyer of the house. You can't even see it because it's covered up by drywall and paint, right? So, and he thinks he's going to get more for it because it's a stronger built house. And you can't see it, so you're not willing to pay for it. So that's absolutely the case. Visually, those things that can be improved and will actually make the life of a resident better, those things can justify rent increases. So we like to buy parks that don't need a bunch of invisible things solved for, but yet there's an opportunity to solve some of the visible things. And that gives us a good opportunity to create a great relationship with the resident as we're raising rent.
Makes perfect sense. So I remember on one of our apartments, properties, we had a garden style apartment, people were leaving stuff in front of their units and it just kind of was looking a little dumpy. And when we had that cleaned up, it gave a whole new look to the property with the renovation we were doing. With a mobile home park, I mean, what happens when your tenants kind of let their homes go into disrepair, whether they're messy around where their lot is, or it just isn't appealing to just anybody? I mean, how do you deal with that? Is it really like, do they have a contractual like obligation, like they're in an HOA, or how does that kind of unfold?
Yeah. So as the owner of the mobile home park, we get to set the rules. So it's not an HOA, but it's a cousin to an HOA. So it'll look like an HOA in the way that there are strict requirements of how each lot needs to be kept, down to the landscaping, even the color of the homes. Like you could get that detailed. But certainly things like the skirting requirements so that there's no opportunity for, cats or something to go underneath your unit. The outward appearance of your home needs to be in a certain minimum standards or qualifications. Storage of bicycles and, whatever used or any items that you would otherwise stack up, number of vehicles that can be parked on the lot, whether or not you can do repairs to your vehicles at your home and how long, how many numbers of days that you have to get those repairs done. So there's a lot of levity that you have as the owner of the park to set forth rules where you can avoid all of that. But that brings us back to the due diligence. If you're driving through a mobile home park and you're doing your initial inspections and you see that rampant everywhere, what you know is you have a heavy lift project to recondition the behavior of your resident pool. So you have to ask yourself if you want to go through that work. If they're used to the prior owner saying, oh yeah, free for all, do whatever you want. And now you're going to come in and set new rules and you have to move them from where they were to where you're going. That might be difficult or impossible to achieve. So usually in a 10-minute drive through a property, I can tell if the property is one that or if the tenant base is one that we want to own or not. It does not take me long. So, but that's another piece of due diligence for us.
So Jack, kind of as we're wrapping up here, what would you say are common mistakes you see mobile home park investors make?
That's a loaded question because there's a lot there.
If some of your favorites.
If I could look at my own experience and let's look at Jack's mistakes. Today, I would say that the initial parks that we bought were too small. It's not scalable to buy smaller parks like that. So I think that if somebody's trying to build scale in a mobile home park portfolio, buying 20, 30, 40 space parks is going to be too small for you. Now, that's probably not going to be the case if you want to buy a single mobile home park 5 minutes from your home. That could be the best investment you ever owned because you can own and manage it yourself and you don't need any on-site management or maintenance. So you could just manage it yourself. So it really depends on your strategy. I think the due diligence, the neglecting we have almost 200 items that we look into when we do due diligence on a property. That's on-site and off-site due diligence. It gets into the detail with respect to the county and the city and the fire and the, code enforcement and all of those kind of things. So yeah, not doing proper due diligence, I think would make a difference. Not making assumptions on what the broker tells you or the owner tells you with respect to where market rents are. So not doing proper due diligence. You should be driving every competing park in the marketplace that the subject acquisition is in and making sure that you're crystal clear on where the market actually is. Otherwise, your performance is going to be out of line for your underwriting. So those are some of the common things. And here's another one. Buying a park that looks like a great deal, but it's in the wrong market. Location, location, location. It's true in every asset class. Very true in mobile home parks. You buy a park in the wrong market, you can't solve for you can't execute the add value strategy. You won't be able to sell homes. You won't be able to do the things that you would like to do to
dealing with the city and speaking to the city is definitely something, especially with older apartment buildings where there's a lot of grandfathered things that are in there, you know what I mean? And you might not be aware of them. So checking with the city and seeing if there's issues, especially with fire, that always comes up, you know what I mean? There's definitely a lot more due diligence that has to go when you're dealing with, I think, a lot of parks that maybe have parts of it that have been grandfathered in, you know what I mean? That you might not be knowing what you're really inheriting.
Yeah, there's private utilities. I mean, there's so many nuances with mobile home parks. We looked at a park, love the neighborhood, incredible city, median home values in the mid 4s. So like easy to sell homes there. And they had all kinds of park owned inventory because it was an old park on septic. No, it wasn't even septic. It was drilled like septic wells and a private water system that was constantly having problems and septic systems that were backing up and old vintage coaches and tired old roads. And I mean, everything was old and poor and kind of band-aided together. So the type of resident that they attracted were the ones that were looking for the best bargain in the marketplace. And they were showing, I mean, there was like a blue school bus in there that somebody was living in and like all that kind of stuff. You can't change that. That park is what it is. So, even though the pricing might look attractive, if your expectation is I could move this to be the kind of park this market would demand, you can't change that tenant pool. You can't change that infrastructure, and you can't change the private utility structure. Like there's none of that stuff that you could change without knocking it over and starting again new. So, understanding all of those components certainly will help you avoid buying something that you wish you wouldn't have.
Well, Jack, thank you so much for a lot of great information. How can our listeners learn more about your business, 5210, and you yourself?
Super easy. Go to our website, 5210.com. That's the number 52 and then TEN spelled out .com, and go to the contact page and connect with us.
Okay. Well, Jack, thank you so much for coming on today, and looking forward to connecting with you here in the near future.
Hey, thanks for the invite.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.